Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Here is Brian. It's Monday morning. We've got Jamie here today, so should be a fun listen to him and his fundamental analysis. And of course, we've got the mayor, Alex, and we've got Sjord for our Monday sort of site update report. So might as well do some intros. Hey, Alex, how you doing this morning?
Hey, sir. Can't complain. How are you?
Good, good. Sjord, how you doing today?
Well, I'm doing great, and as you see, I'm screen sharing some female Lego minifigures because last time I got some feedback there were not many Lego women figures representing TOI.
There you go. All right, females represent.
Exactly. So they are all cheering for the daily briefs today.
Yay! And Jamie, how you doing today?
Can't complain. All good this side of the pond. Nice to hear everyone. Glad everyone's all good.
Good, good. So, Sjord, you want to maybe start us off with your report? Go for it.
Yes. So there's not a special screen that needs to be shared besides my female minifigures. So this and so maybe we should start off with an apologize to all the level 3ers that lost access today. But that's all restored now, or it should be restored. So if you still have any problems, please feel free to reach out to either Julian or me. So that's basically what we've been working on today. And last week we have been working on a lot of cleaning up on the website, data integrity, like we said. So you should see the screeners working again on the screeners page and not just the screeners from Alex and Sanne, who are working on a consistent basis perfectly, by the way. So thank you for that, Sanne and Alex. And something that I can also share, actually there is something to share today, is the balances page of TOI again. So let me quickly share that screen. It's something that we've been working on for the past couple of weeks, and it's not finished yet. Of course, it's still work in progress, but it's now replicating at least the situation on Bittrex. So here you will see all of our Bittrex positions. We already had the Bittrex trades being reported, and Binance will be working this week as well. So then we have Bittrex and Binance totally synced on the website. In the backend, this is all being built from a point of view that in the future TOI members can link up their accounts as well if they're willing and interested in having this data. But as I said in the launch this week, I do think that there's no real value at the moment for members to do that until we have some additional helping pages, for example, like show me the Bittrex positions without a little old lady cell on a double order working. So this is something that we've been working on and which is now live. Another thing that we're working on is the backtesting engine. So we're making progress with backtesting the screeners. It's not finished yet, but I hope to have that finished over the coming month. We did some fixes on the dashboard, on the custom dashboards that everyone can create. And this week I will be rolling out an update, especially for which I think it was, Joshua, thank you for that. It was an idea of Joshua to have your own widgets for screeners and being able to configure them. So what you will be able to do over the coming week is that you can add a screener widget and then you can say, okay, I only want to see the double bottoms in price on Binance, so that you have a bit more of control of the screener results that you're getting on your custom dashboard. So that's also exactly the planning for the coming week, what we will be working on. So that's what we've been doing and playing with Lego in the meantime as well. Yeah. Let's see.
All right, thank you for that report, Sjord.
You're welcome.
I don't know, Jamie, do you feel like jumping into your report here, or how do we want to do this today?
It's completely up to you, Mr. Beamish. I honestly don't mind. I don't mind jumping in. I don't mind just sitting and hear you speak away. No problem.
All right. Feel free to fire when ready. Go ahead.
Let's do this. Okay, right. I'll just put my screen share on. I don't even know when they're coming to you. Right then, guys. I hope everyone's all well. Right then, to start off, fun stuff. So just to give everyone a heads up, as usual, this is not financial advice. Presentation is for informational and educational purposes only, and it's provided as investment, provided as investment advice, endorsement of any stocks, ETFs, futures, options, currencies, cryptocurrencies, etc., etc. No liability for any loss, whether direct or indirect, is consequential from any use of information on this presentation. Right then, let's have some fun. Right then, we'll go over the past 2 weeks' reports. Lots has come out today, so we'll talk about that also. So on the 20th of March, we had the Fed rate decision. Unsurprisingly, it stayed at 2.5%. So nothing changed there, even though I think everyone's still a little bit uncertain with where everything's going. So, but we'll discuss that as we go throughout the presentation. BOE interest rate decision for the UK stayed at 0.75%. Also unsurprising, simply because, well, who knows what's going on in this country. The preliminary results for Germany for the manufacturing index came out 44.7. These are the preliminary results, even though they were forecasted at 48.1. So that's quite astonishing because, I mean, if we look at the Chinese data as well, I mean, Chinese data hasn't dropped as much. And as we know, Germany do rely quite heavily on China. If we look at the US building permits, so down just slightly, but not too much, down from forecasted 1.32 and actual was 1.296. US GDP results quarter on quarter, so it's forecasted 2.5%, but the actual was actually 2.2%. So this is quarter on quarter annualized. So we're starting to see things maybe slowly creep into the US economy, although the data is a little bit all over the place. I mean, data what came out today actually made things look pretty good for the US. So, so lots of things to look at. The UK GDP stats better than the forecasted 1.4%. So UK still hanging in there as at the moment. So everything's hopefully going to be okay for the moment. US Michigan Consumer Sentiment Index, so it was actually up from forecasted 97.8 to 98.4. One thing that's come out over the last 24 hours, so we've had the manufacturing index, the government, and also the private manufacturing index from China. So forecasted the government's manufacturing PMI, so it was forecasted 49.5 and actual was actually 50.8. Forecasted for the private, it was 50.1, and the actual actually came out 50.8. So these positive signs, at least for the short term. I mean, whether this will carry on, but it's nice to see at least that China has gone back above 50. So as you can see today, the markets all reflected on that, and they've all started, they've all moved up throughout the day as they opened. So some positives there, at least for this month, I suppose. On the negative side, the German manufacturing PMI forecasted from the preliminary results of the 44.7, but actual came even down from the preliminary results down to 44.1. So Germany on the manufacturing front is getting absolutely hammered at the moment. So if you do have exposure in the manufacturing sector in Germany, just be very cautious of everything that's going on. So, you know, recheck, double check, just really look into your fundamentals of all the stocks you're in. UK manufacturing PMI came out today, so did really well than forecasted. So it's forecasted 51.2. The actual was actually 55.1, so very good, but we do have to just be aware of the fact that a lot of things are going on in the UK at the moment. So from a manufacturing perspective, obviously we've got companies now trying to stock up as much as possible in case things get more turbulent over the next coming weeks and months. So we do have to take that result with a grain of salt, but we'll see with the manufacturing index next month, and we'll just see if if things actually stay around that level or whether that's just a fluke for now. So yeah, we've had the ISM manufacturing PMI, which was forecasted at 54.2, and the actual was 55.3. So looking well for the US at the moment. Still quite stable, still around those mid 50s. So that's really good. Anything you want to comment on? Anything you've seen over the last couple of weeks, Brian? Anything from the events point of view? Anything fun over in Canada at all?
Not in particular. You're doing a great job.
All right.
Keeping on.
Okay. Right. Today. So I won't be here now for the next month. I'm actually going to do a course in Thailand. So I thought what we'd do today, we'd go over
Thailand.
Sorry?
You're going to be in Thailand?
Yeah, so I'm actually going to be doing a course, a portfolio management course over there. So yeah,
for you. Be sure to look up Julian.
Yeah, well, I did speak to Julian, but I'm not in Bangkok, so I'm not sure whether I'll be able to have time to make it over there. But if I do, I'll have to drop a message. I've already spoken to him and seen if he is free, so we'll have to maybe arrange something if I've got time.
Girlfriend, Alex, are you married or is it just girlfriend? Anyway, she goes to Thailand. Just girlfriend still?
Yep.
Anyway, doesn't she pop into Thailand quite a bit?
Yeah, Thailand and Brazil.
Well,
That's insane. Not bad places to go and work, I suppose. Good for worse places. Nice.
So, I didn't mention it, but anyway, if you happen to see Julian, say hi to me for me.
Well, I'll spot him from a mile off. I'll be like, Julian! I'll go and hunt him down. So we'll go over all the different things that I would personally look at for the month coming ahead, just to keep things for everyone, just to keep in the back of their minds, just to be aware of the things, the changing pieces that will be going on over the next month. Okay, so we'll be going over the geopolitical events very briefly, because obviously I clearly do not want to talk about that thing for a long time. Central bank meetings.
What is a new verb in your English language now?
What's that? Oh, I saw that. The comment, what Brexit.
You didn't like that one, eh?
I was just like, this is so true. Who knows what's happening? I mean, there's votes going on today as well, so I think they're going to see which Haribo is their favourite. I think that's what they're voting for today.
I don't know. It's more of a crazy outlier. Donald Trump as the president of the United States, or Boris, the prime minister of the UK?
To be honest, things have got that ridiculous. I'll more than happily have Boris in just for the photo op with Donald Trump. Imagine the memes. Crypto Twitter will have an absolute best. It would be great. Half class full. That's the way we've got to look at it. Yeah. So
that Boris was going to be prime minister?
Who knows? I mean, I just couldn't imagine. I mean, I could imagine him actually getting in. I mean, the world's obviously a lot crazier than just Boris Johnson as prime minister. The problem is, I mean, he is a little bit like Trump in the fact that he doesn't really have much of a filter. He's just like, so one of those classic posh British people. So yeah, but FOOP will be good. Just think of the memes.
At least we know for certain that Boris, that's not a toupee.
Who knows, to be honest. I mean, it's funny because his son's also an MP as well, and he's a spitting image of him.
Really?
Yeah, so the two of them. Yeah, bright blonde hair. Yeah, yeah.
That's great.
Yeah.
Continue on, please.
No worries. So we'll also just talk about volatility for a little bit as well. Since we're coming, late into a cycle, we just, need to keep an eye on that. The earnings season, we'll talk about earnings season as well. All just briefly, just to just all the things we need to be keeping in the back of our mind from a top down and also a micro perspective as well. And then also the change in macro fundamentals that could come, that could arise over the next month. Okay. So let's first talk about the most fun topic of the day. So Brexit. So there's a couple of things that will be going on, at least possibly will be going on over the next, 14 days. So today there'll be another bunch of indicative votes. Who knows? I still don't know what the questions are. It's not till later this evening. So they'll basically try and assess where MPs, what deals they want to prefer the most, because obviously it was a total fail last week. So basically, whichever will get the majority of votes tonight, this evening, will then possibly on Wednesday the 3rd, there will then be a possible vote with whether to go for Theresa May deal or the majority, the votes that get a majority this evening. That's obviously still got to be confirmed, but that is looking like the most plausible step at the moment. And then on the 10th of April, the EU summit will then get all together and talk about Brexit. And then obviously on the 12th should be Brexit Day, but who knows? So probably not likely. It's more than likely that there will be another extension. And even then, it wouldn't surprise me if there will be a very long-term extension. Obviously, all of these things do not help anybody, not the UK, not the EU, because, well, we all know this late in the cycle with this much uncertainty isn't healthy for anybody. So that's the Brexit front. I just want to quickly go over that, to be honest. So the next geopolitical events that we want to keep an eye on over the next month is, of course, the China-US trade negotiations. Okay, so if anything does arise over the next month, I mean, I'm sure you'll know a lot more, to be honest, Brian, on this front, because if I'm honest, I haven't really followed too much on when their next meetings are or anything. So if there are meetings over the next month, or if anything gets spoken about, just we need to try and evaluate what will be going on. So if a trade negotiation does get sorted and a deal is done, then we need to figure out as quickly as possible, since the markets will react very quickly, of what it means for certain assets and asset classes. I think the biggest talk of the town is it soybeans? They're having an argument over at the moment. So that's another geopolitical event we just want to have in the back of our minds, because Mr. Trump could come out with a tweet randomly that could ruin a stock. Who knows? So that's the China-US trade negotiating front. Central bank meetings. Okay, so the main ones that I'm personally looking at is obviously the European Central Bank have a interest rate decision on the 10th of April. Interesting to see what they'll do. It wouldn't surprise me if it stays the same. Federal Reserve, I think that's the big one. 1st of May. Personally, in my own opinion, I can't really see the Fed changing anything maybe until the latter stages of the year, but who knows? They could reduce rates, they could raise rates. So just keep an eye on it anyway. So just to keep that one in the back of your mind, just to see if anything does change, because if the Fed change, usually nobody will change anything until the Fed changes something. So the puppets of the Federal Reserve, the Bank of England, they have a meeting on the 2nd of May. Again, wouldn't surprise me if it will stay the same. But just a couple of meetings that we should all be aware of, and just to have it in the back of our minds to, if something does change, then we need to understand what will happen and what that means for the markets. So one thing that obviously does affect the markets if it comes to the Fed rates is the yield curve. So this here is the 10-take-2 yield curve. So the 10-year bonds, 10-year treasuries take the 2-year treasuries. At the moment, it's around 0.15% spread. As you can see on this graphic here, you can see that when it does get into negative territory, that is usually a signal that there is a recession in close to the future. I presume a lot of people would have seen everything that's going on with the 10-take-3 month. So obviously that has inverted. That is usually a signal for a recession to happen historically 12 to 18 months after the yield curve inverts. So just time-wise, we want to definitely just be putting all the pieces together, just seeing what's going on. What does this mean for the asset that you're looking at? Is it cyclical? Is it defensive? So what does this mean? So lots of things, you just want to know, just so you can feel more comfortable in the positions you're in. Okay. Next, possibly the most important indicator of all is the volatility index. So this is the VIX against the S&P 500. So at the moment, we're actually at quite stable levels, which kind of scares me more than actually makes me feel bullish. So volatility, of course, again, we need to watch out with the VIX. If you've got positions in the US, obviously there are volatility indexes for anybody in the UK, you've got the VFTSE, is it the VDAX it's called? So for the German. So, just keep an eye on volatility because things can change quickly. So if volatility does start to rise and you're not feeling happy with your position or you're not sure, there's nothing wrong with this late in a cycle. Just reduce your exposure. If you're not sure what this will mean for your asset, the main thing that we want to do is, as Brian always says, is just to make sure we come back tomorrow. So if you do have quite a lot of exposure in table, just reduce half the position, just relax, understand, is your asset that you're trading, is it defensive, is it cyclical? So then you can then work out, well, how sensitive is my asset against volatility and obviously the S&P in general. So that's volatility that we need to just keep an eye on as well. Possibly something to look over for the whole year really is earnings season. So I'll drop this link in. I'll drop this link into the chat once I've done the presentation. So earnings. So we're at the start of, we're starting to get Q1 earnings now. So if you are trading on the stock market at the moment, just be cognizant of everything of the earnings. If you think that if the stock that you have is going to beat earnings, what does this mean? If you think it's not going to beat earnings, well, we're going to probably have quite a lot of shocks over the next year when it comes to earnings. So we will start seeing a lot more volatility as, analysts hate to be the first people to say this stock's not going to do well because obviously they put their job on the line. So, they won't start downgrading on a few of the stocks until, well, basically when the figures come out. So you really need to do your own homework on your own asset. So just, if you have got positions, look at when the earnings data is coming out and, try and, even if you want to try and hedge if you can. For the people who have done level 3, look at your options. Just try and hedge your position if you can. I think that's probably the most important thing over in 2019 is definitely earnings season. So just keep an eye on your assets, okay? Global PMI, so manufacturing indexes. So this is the global PMI. So this is the PMIs globally. So you've got in orange, you've got your global manufacturing PMI, and in blue, you've got the non-manufacturing PMI. So we can see here that, well, we can see from all the data that we've seen over the last couple of months, we can see that manufacturing is obviously being impacted a lot more than the non-manufacturing. So personally, I think a lot of the market has priced in the negativity from manufacturing, but if we start seeing services starting to break down quite quickly here, then we should definitely, okay, I've got quite a lot of service stocks, again, look at your exposure. We all want to try and, slow and steady returns, but with the lowest amount of risk possible. And this late into a cycle, nobody wants to get, no one wants to get run over. So just be really careful with everything you're doing. But I'm sure everybody will do great. So service indexes come out tomorrow. So keep an eye on all the service non-manufacturing indexes tomorrow. And then, just to conclude, so just be aware of the different events that are taking place over the next month, okay? So if volatility does rise, just reduce your exposure or even just sell your positions. There's no harm in just sitting in cash. 2018 was, cash was actually the best asset to be in 2018. So there's no rush. The market's not going anywhere. If you're not feeling comfortable or if you feel like, you're a bit out of your depth, just, there's no harm in just sitting, getting some popcorn, watch the markets go crazy. Then when you start to feel a little bit more comfortable with everything that's going on and start connecting the dots, then, slowly building some positions if you like. But, no rush, just slow and steady. as I said previously, understand the asset that you're trading. Okay, so you want to look at everything. So you want to see what analysts are actually predicting for the next couple of quarters. So then if their earnings are coming out very soon, you can then work out yourself, okay, do I honestly think that this asset is going to beat earnings, or is it actually going to do really badly? Because the last thing you want is risk, because when earnings will come out, and they'll come out when the markets are closed, you'll be highly exposed to gap risk. So just be careful with everything with all your positions, okay? And then keep an eye on the service indexes and be aware of any shock results with the earnings. All right, so we'll go over the next 2 weeks of all the different indicators that are coming out. So I was actually trying to look for further back, but I couldn't actually get any more, so I don't think they really report further than 2 weeks. So we've got lots of services PMIs coming out tomorrow. So we've got the German, Italian, Spanish, UK, US. There are others as well, but I mean, I'd have to list them all, and then that'd be like 5 pages. So definitely we want to be looking at, most importantly, is the US non-manufacturing ISM. So it's forecasted at 58. So, I mean, hopefully things will stay around those levels. UK services manufacturing. So services is obviously getting hit hard with everything that's going on in Europe. So rather than a lot of the European countries where the manufacturing is actually leading and the services are actually lagging, the manufacturing indexes are actually weakening and the service manufacturing is still staying stable. For the UK, it's actually the opposite. So so we just need to keep cognizant of everything that goes on in the UK and what that means and how that will impact the other economies. Spain is actually doing quite well, to be honest. I mean, the manufacturing index came out today a little bit below what was forecasted, but compared to the rest of Europe, Spain is actually growing quite well. Italy still not doing great. Fortunately, at least silver lining, services above 50 still. Forecasted 50.9, so we'll see how that comes out tomorrow. And then Germany's servicing industry is still doing well. So previous was 54.9, and it's forecasted exactly that. And over in Canada, so forecasted 51.4 for the PMI. So we'll keep an eye on that. Let's hope that beats it for the beamishes of the world. ECB, so the European Central Bank, as we spoke before, forecasted 0%. Wouldn't surprise me if that stays exactly the same. The US consumer sentiment indicator, so forecasted 97.8. So let's see how that comes out on the 12th. And then important ones, the GDP, Chinese GDP and the industrial production. So GDP Q1, so that will be coming out on the 17th of April. And then you've got your industrial production on the same day as well. So forecasted 6.4 annualized. And then you've got your industrial production, which is forecasted at 5.5%. And then finishing off, you've got your building permit. So your building permits, 1.3 forecasted. So keep an eye on that. At the moment, the housing industry is still looking relatively stable in the US. So no worries there. Delinquency rates as well in the US are looking okay as far as mortgages are concerned. Student loan scares me a little bit, but I've been told not to worry about that. But student loans is, I think it's around 4 trillion. The debt is now, is it, for the US student loans? I mean, it's absolutely crazy.
It's a bit odd, doesn't it?
It does worry you a little bit. I mean, yeah, because it's a mixture over there. So you've got more, I think you've got more private than government student loans over there. Where in the UK, you see a majority is government. But we're starting to see now the government here actually starting to sell those contracts onto private companies, breaking their contracts. But I mean, you'd have to be quite, I suppose, naive to think that the government were going to hold onto those loans anyway. So yeah, and then finishing off, if again, just to remind people, TRI UK meetup. So that's on the 1st of June. Okay, so please, there is a document on the UK chat. So please just fill in your name, even if you don't want any food. Just fill in your name, because I do need to get the numbers quite early, so then I can book the table for the Saturday night. So if everyone could please just throw your name in there, just so I can start getting a rough estimate of numbers so I can book the table in case they will end up getting fully booked. So yeah, so next presentation won't be until May, but remember what our number one job is, as Brian says, is just, slow and steady. Make sure you're coming back tomorrow so you come back to live and fight another day. So yeah, so that's everything from myself, Mr. B. I'll take it. I'll just sit here quietly now and listen to you chat away for the next half an hour, if you don't mind. Cool.
All right. Thank you very much, Jamie. Appreciate it.
That's no problem at all. Thank you. Thank you.
Overview. Great stuff
Thank
as
you.
always.
No worries.
And super excited to hear that you're heading off to Asia to further your learning. It's interesting that you have to go to Asia to learn portfolio management.
Yeah, well, I think that's just where they've chosen the location. So people from all over the world will go. So I don't know, they've just chosen that as a location. So hopefully it will be full of knowledge, and then it'll be great to pass it on to the CRI crew.
Oh, that'd be awesome.
Of course, yeah.
We're all students of the market, so we can
Exactly. Yeah, without a doubt.
All right. I'm not quite sure what else I can add. Maybe we'll make this a shorter video here today. But Alex, is there anything you wanted to add?
Not really. Not too much of a look at the market today. Just coming back from university, so.
Okay. It is Monday, so we probably shouldn't read too much into what we're seeing, but it's a couple of things that, and unfortunately, just as I joined this Google Hangout, my Chrome here crashed. So I don't know whether you were watching me. I was trying to feverishly load up all my charts here. Before Jamie finished, I think I got them all loaded up, but probably maybe Monday's not a bad idea just to do a simple trend overview. US dollar still pointing higher. And on balance, for whatever it's worth, I actually think that the Fed's actually going to have to start coming out and talking about raising rates again. If you look at things like the stock market, this to me looks like a bull flagpole. So, believe it or not, I know it sounds crazy, but I think my upside objective for the stock market has to be something like this. This is going to be a big rally. And it was sort of what I was afraid of, sort of 1987 repeat. But this is the Dow. Don't be shocked, everybody, if within the next 6 to 8 months we rally up to a better part of 30,000 here. That looks very doable. And probably if we play connect the dots here, probably going to do something like that. So we've got some upside objectives, probably a little bit of traffic in this area, then a bit more traffic up in this area. I'm probably looking for some sort of insane blow off top all the way up top here. We kind of talked about this last week. So we'll leave that on the screen, but I got a funny feeling this thing's going to ratchet higher here. We talked about this, I guess, last week in that, let's see. Well, I guess we can just leave that. Here we'll go like that. So we'll leave that on the screen. Let's see what happens. My hunch is YouTube having problems today. It's not Brian. It's not YouTube that's having problems. It's Brian's having problems today. Anyway, so there is that consolidation you can see in the breakout today. And what I noticed too is that the bonds, these are the yields, they're all screaming higher here. So I think that sort of inversion that we saw there, and really I still don't really believe that it was an inversion, but anyway, you can see how, interestingly enough, the Fed Fund futures, and this is probably the one that Thomas probably wants to keep an eye on. the Fed fund futures for sort of the future direction of interest rates, they actually ticked down, rates going down, but you can see the corporate interest rate market, along with the rest of the yield curve, seems to have said, okay, enough with this lower rates. Let's start moving rates back up now, which makes perfect sense because now they got the Fed all talking dovish. So now they go and ratchet rates higher, and now the Fed will have to come back out and say, oh, no, well, now we're back to raising rates. And then Mr. Orange Hair is going to say, see, this is why these Fed guys need to be corralled, and you need to appoint my guy in there not to raise rates. Because so now the Fed's turned into a political football. And I wouldn't be surprised if they generate an outright crash through a complete lack of confidence in the Fed. That really wouldn't surprise me going forward. But I also noticed too that Chinese stocks seem to have broken Mountain Man top here. We never really did have the M come in. You can see the M tried to form here, but then they held these lows and worked higher. You could technically argue it's only 2 lows, but I know lots of people that would just trade this bot level off at 2 lows. And how that's broken out, it's also a little fast for an LJ, but technically that is a trend line break. So the rule is, you want to try and hunt like structure on the other side of that break. So boo, rally up. This nice narrow sideways channel breakout. I'm sure there's lots of traders who just bought the break of that high there, and their stop is below there. So they're enjoying themselves. And as Jamie sort of alluded to there a few minutes ago, and I guess I sort of saw this on the rags. I guess the trade talks are making progress. I don't know. But the grain markets have just been absolutely destroyed of late, I guess, because of that trade talk nonsense. I was wondering why they were as soft as they were. Where? So there's the beans. The meal actually looks really interesting in here. There's oil. Oil's just basically come right back to the original bottom. The wheat and the corn were under intense pressure, but technically corn still has a bottom working. And then what was really interesting was at the end of last year, beginning of this year, we heard lots of chatter from industry that they were really bullish of pork, and of course when grain prices fall, that especially animals that are still alive. If grain prices are perceived to be softer, then the cost to keep the animals alive is lower. And so farmers have less impetus to send their product to market. And so you often get sort of a lack of supply of new animals to slaughter. And so as a result, price ratchets higher. So, maybe that's gone a little too far too fast, which is kind of funny because, China actually eats a lot of pork. So, and I'm not quite sure, though. I have a funny feeling that China banned American pork products because of the swine disease, but I can't remember the story off the top of my head. It is actually kind of interesting. Feeder cattle, which technically have been animals that have been slaughtered, it's actually bottom, but live cattle, and again, that sort of talk about if grain prices are weaker, then you're probably going to see less supply of live animals. So as a result, prices get bid up. Maybe they're anticipating that the grain prices are near a bottom here. So if you do play the grains, I got a funny feeling we're probably near some sort of pivot there. This morning I noticed that the soybeans were catching a bit of a bid. You can actually see the original double bottom working here. So, if you are interested, and I actually was following this Telenium soybean fund. and was reluctant to take a position earlier, but I'm starting to warm to the idea now. Where was it? Over here somewhere. Can't remember. Here it is. So this is the Telenium Commodity Trust, the soybean fund. Still hasn't quite gotten down to areas where I want to load up, but I am definitely more interested in it now. And usually we have a nice little seasonal rally into sort of the germination phase of this market. So if the Americans and the Chinese are making peace, and as Jamie alluded to earlier, there was some chatter about soybeans being used as sort of a political football. I might take a good look at the soybean fund here if we can put in some sort of W through here. So we'll keep an eye on that. All right. So I think that basically covers the broader market. It's interesting to see commodity currencies are perking up here. The Australian South African rands held its lows. Russian ruble turned back up on better than expected GDP data. Australian dollar and Canadian dollar still trending lower, but interesting sort of side. There's a pretty big political scandal going on in Canada right now. And the current federal government is socialist, left-leaning. So I did hear a week or two ago, maybe it was a month or so ago, that the political scandal in Canada actually may help the Canadian dollar, because if the current ruling party that's more left-wing gets run out of office because of the scandal, that should, help Canada balance its books a little bit better, and that should be more bullish of the Canadian dollar. So really interesting pivot here in the Canadian dollar. We might see it quite a bit higher here down the road, depending on that political scandal. As you can clearly see, it looks like we've had a blow off top here in the interest rate markets. They look like they're getting a little overextended. Well, we'll see how that goes. Stock markets, hearing lots of talk about golden crosses. And as I sort of showed you on that Dow chart, there is actually realistically a little bull flag here that could take us substantially higher. And, if we look at stocks that have been sort of beaten up recently, that Boeing story sure is interesting. In that the scuttlebutt I'm hearing is that now they're saying that the crashes are not caused because directly of Boeing software or whatever. And you can see the stock just is violently moving higher here. So, a big part of that Dow rally might just simply be stocks like Boeing taking back a big chunk of their losses. Don't be surprised if this thing rallies back up into this topping range. Gaps are filled in and the Dow's up like 1,000, 2,000 points because of this. So wouldn't shock me one bit. I suppose we should keep an eye. Interesting how the Canadian or the U.S. bank stocks have all rallied smartly back here, which is weird because Friday was the quarter end. I actually would have thought this would have happened on Friday, not today, but maybe there was some sort of options expiry shenanigans that they wanted to keep this market down for one reason or another. Probably good for the economy and our sort of talk about, Dow going screaming higher. This is such an interesting trade. We actually saw the same thing happen on NVIDIA, where they actually gave you a couple opportunities to get in off of reload zones and gap levels. And now you can actually see Alcoa here is now putting in a double bottom. I wouldn't be surprised, connect the dots kind of conversation. I really would not be surprised one bit. In fact, we could probably go there to there to there, yeah. So I wouldn't be surprised. And of course, that was sort of our target all along right there, right? That's the strike price. Our target, actually, believe it or not, is way up here. But I wouldn't be surprised at all if you see Alcoa heading along this trend line here. So hats off to anybody who did take the Alcoa trade and they're hanging in there because you just got a new buy signal today. And that should bode well. You know, I also noticed we were watching the little VCIM names, those names that are involved in sort of the basic metals, copper, aluminum, all that kind of stuff. They have really perked up lately. And there was one stock in particular, way to go, Stan the Man, Stanimal. He was able to get into this Orestone. This was sort of my copper base metal proxy play. And such a good example of VCIM. I mean, if this was an altcoin, would be interested in it? Yes. It's almost tempting, to be honest with you, to go buy the breakout here at 16.5 cents. I got my stink bid in at a nickel. Don't think I'm going to get that filled. But you know, if Alcoa is going to outperform, this guy's basically in that same business, copper, aluminum kind of business. And it sure looks like he's pointing higher. So that's the VCIMer that's running now. Unfortunately, I'm just not in it. So it kind of sucks. The rest of the little junior VCIMs just sort of not really doing a heck of a lot, just treading water. Hats off to Shane. Great call. I personally couldn't touch this because it just had way too much stock out. But, you know, perfectly good analogy of 50% rules. And really, we could even argue 50% could, well, now it's April, right? So probably best to use that high. But really good analogy of how stocks work their way up to 50% rules. So way to go, Shane, if you're watching this later on. Like I said, I couldn't touch it. Too much stock out for me, but that doesn't mean the market can't work its way higher. So nice call, Shane. I don't really see anything. I mean, our little ones that we bought recently, the drone stock after this big pop. Congratulations to all those people that got doubles off because she's just fucking shit the bed here and made a new low. I'm not too concerned. This would be sort of nanny nibbles. Didn't really think about trading this so much as I really wanted drone stock in my portfolio. I'm humming and hawing, though. I might just walk away from this. I don't know. It's a tough one. I did walk away from that Alio Gold, and I think on balance, you know, that one had a lot of stock out, and it was just a pure gold play. So relatively okay with that decision. But, you know, our little drone stock, a little bummed about that. But, you know, I can't take this stuff personally. So stock markets, you know, stocks are stock and bonds are bonding. Picked up a little bit of this Sonos on Friday. You know, I honestly think you could probably just work your bid and see if you can get filled on any kind of pullback here. I don't think there's any great, you know, rush here, but they are coming out with a new product offering. So with IKEA, so we'll see how that goes. But that was an idea that I strapped on here recently. You know, I've got to feel kind of sad for the people who bought this Lyft IPO. This thing has just turned into a train wreck. I honestly don't know where the bottom of this thing is. So you're just going to have to let it settle down. I suppose you could argue that's a gap and go too. So probably quite a bit more to the downside there. All right, well, that's basically everything that I can comment about stocks and commodities. Pop in just a quick view of crypto, and then we'll sort of head you guys on your way. The Litecoin market is holding on to its trend change. I was thinking we probably were going to get a 38.2 retracement, but she just doesn't want to break down here. So going sideways, if we lose these lows, that's an inside bar failure. Keep in mind this is a weekly price chart. So if we do lose those lows, then that would be my target, but we haven't yet, just sort of parked here, going sideways. Notice the Tron was trying to turn the corner. We had talked about this recently. The trend change had turned back to the bulls, and then she went and fractaled here. So anybody who had taken that fractal, well, it's not a terrible idea. Buying into moving average support, and you can see it's working its way up now here. When you go on to a daily or something, you probably see a half decent little bottom here. In fact, that looks very body. If we go boom, boom, 33, no more than 66. And then go boom, boom. Low there's 21,036, 21, we're close. All right, this is the fun part of technical analysis. There we go. Okay, let's throw on the old bot trade. There you are. Actually, wow, the entry is quite a bit away from here. So, 1, 2, 3, 4. First market structure on the other side of the trend line break. Looks like that's right there. So, the funny thing with Tron is it's almost like a cult. So I don't know whether there are any, did I just screw that up? Yeah, I did. I don't know whether there are any Tron sort of followers, worshipers. I don't know what you want to call it. But I think you could actually make an argument for nicely. And James, actually interesting. You got 1, 2, 3, 4 lows to risk against here. So, if you're a trader, there's a trade for you. Merry Christmas. I'll throw that into the lounge. Oh, there's an idea for you to chew on. I'll put that back to the weeklies. Haven't really seen any trend changes in any of the other creatures. That EOS is now above the trend line, so any sort of sticking of that move should cause those trends to change. Yield Bitcoin is now accepted into the 13 EMA, and as we sort of talked about in that show yesterday, and I've been tweeting out, this obviously is a very important level for Bitcoin. So we're coming right up to that big apex event. And if we can pop through there, odds are we're probably going to head up to the 30 SMA. So, and I think we've been sort of kicking around 4,500 on charts. So, kind of like this move, if you can get through that 13, we usually zip right up to the 30, and then we'll go through the process of, is this a bull or is it a bear, and do these things cross. You can actually see that on this EOS. See how it accepted into the 13 and went zipping straight up to the 30 and then consolidated. So, trend-wise, Litecoin, the leader in this space, they're having events coming up. Makes sense. That was supposed to happen. Interesting, these little sort of newer stories in this space are actually leading the charge. And the old sort of stalwarts are actually just sort of stalling here a bit. I don't even know if we even bother following Bitcoin Cash and all that nonsense anymore. That's probably an old story. And actually, what's interesting? In fact, you know what? I think I'm going to just get rid of him because I hate that guy. He's a dickhead. Let's watch good old Dash. We haven't watched Dash in a while. Let's do it versus USD on... Trex, I think they're no Stamp, Phoenix, they're all over the place. Well, let's do it on Binance, see what it looks like. Why don't we watch Dash? It's kind of funny. Dash this morning. Sen, I think it was, sent me a message saying that Dash has a new cheerleader, which I thought was kind of amusing. I was so amused I actually tweeted it out. Move over, Amanda. We got a new cheerleader. So I have no idea who this person is. I think her name is Heidi or something like that. And the interesting thing is, and I don't know when she came on, but clearly you can see higher highs and higher lows defines a bull market. And look how far away it is from value. This should actually be a really, really good lesson for all of you, especially you level twoers, in that we are substantially below value. At the very least, we should expect this market to come up and kiss the bottom side of value here. And then if we accept into value, then next stop would be to test value high. So maybe the new cheerleader will light a fire underneath the Dash community, get them all rah, rah, rah again. But it is interesting how this kind of fundamental events happens to coincide with the price charts. And you kind of see how, in a weird sort of way, while we're going through this, the Dash people were like, yeah, we're not doing anything. There's no point in hiring new, marketing people. We don't really have anything to get excited about. But then notice as the market's turning and bottoming and stuff, now this kind of stuff develops. Isn't that interesting how that's a, correlation? So clearly Dash, we should probably keep an eye on again. And, if you want to get in on this, draw your reload zones, probably dips against these original levels are your buys. But it is interesting to see how the correlation between markets bottoming technically and then the new sort of marketing campaigns of these various cryptocurrencies is starting to kick into high gear again. It's fascinating, really. So, if you're looking at Dash, this happens to be off of Binance. I don't, I'm in a reserve judgment about Binance unto itself. I don't think it makes sense any TRIers go and chase this. I think what we should probably be doing, if you do want to buy in, it just takes patience and discipline. Is you got to load in your reload zones and notice, basically a serious test of this level has you back on the buy side, somewhere down in this area here. So, for those people that, are like, gee whiz, Brian, I can't watch the screen all the time. I don't mind the idea of, I don't know whether that's a lower low or not, but something like that. Let's see, that is 63.12, and that is 57.78 and 57.61. All right, so that's the low. But I don't really mind just hunting. You can sort of see trend line support, reload zones. If there were any gaps on this chart, might be interesting to hunt for them. Maybe down in this area here. It looks like there might be a cheeky little gap right there. So if you did want to participate on the long side, it looks like it's around this sort of $70 area, 70, 75 bucks, something in there. Which actually that's pretty expensive for one Schult coin. Geez, $75 a coin. All right, so that's sort of your overview of the trendingness of crypto right now. The individual stories, I didn't really see anything pop out today, but just such a good example of everything that we sort of teach on this site. Wait for your W's. There comes a nice W, nice and confirmed. Look at this beautiful volume. Really, you could argue that this is a lower low in volume, so that creates a volume divergence. You got sort of sloppy W's here, but you might see it a little bit better in RSI. So hopefully, I don't know whether you can see this or not. It might be hard to see. If we go like so, W and RSI. Oh, Jesus. All right, let's try that again. So let's go up, up, up. There we go. So hopefully you can see W and RSI, W and OBV. Really, you could argue there's a W in Willie, but it's a little harder to see. But, you know, this W here along with this W here, do we call that anything in particular? Long and short of it here is we're getting pretty bullish signals coming out of those lows. And I was exceedingly pleased to see that people were posting in the lounge that they were banging out doubles on this. So clearly you guys are getting the message. And really, ultimately, this is where we need to get this place to, is that, you know, we have, I think we have like over 100 level 3 graduates who are alumni on the site, and they're just in there posting away. I think actually, Adam, didn't you say you banged out a double on this? But anyway, somebody was talking about this over the weekend. Yeah. Adam is turned out to be just one hell of a trader. His wife and kids should be so proud of him. Very impressed with the work that you've done, sir. And it's great to see, you know, term by term by term. You never know who the all-stars are going to eventually be. You just don't know. But it's one of the sort of treats that I get, is to watch, you know, the various different plants in my garden all sort of grow at their own pace and blossom. And I think Adam right now is a big ass fucking sunflower, and he's just opened up his petals and he is screaming to the world, "I am here! Get used to it!" And I love it. So hats off to you, Adam. Doing a great job. Anyway, you know this, Colleen. Can you understand the logic? When you look at a chart like this now, do you get what we're trying to do here? I mean, and hopefully this is very, very different than the way that you looked at the market before you knew me, all right, and before you knew TRI. You know, you just did the liquidity events. Do institutions buy up markets or down markets? Can you see how the smart money, the institutional players, they're all piling in down here? Dennis, I think you're also level 1, right? You know, long and short of it here is this is what, you know, you want to get good at making money from trading and in the market. This is what you have to be able to see. And as soon as you get this, as soon as the light bulbs go off, you're set for the rest of your life. Ironically enough, our whole existence about life becomes so much easier. You don't get sucked into the nonsense. And actually, you can just take advantage of this day in, day out. So congratulations to you guys who were able to take advantage of this. This is just yet another example. I don't know whether there's anything really in particular. I mean, they're just all Wing one at a time, right? And you just have to be on your game. And I feel really sad for a lot of people in crypto, you know, that came into crypto at the beginning of last year, right? And they just didn't make it to the point of seeing these kind of markets. Now we're finally here. In fact, I was even saying in that broiler chicken show, you know, for months and months and months and months and months on end, and it just felt like it was never ending. We were just, you got to cool your jets. You got to cool your jets. You got to cool your jets. And now they're finally all, you know, these W's are all finally starting to come in. I mean, one guy in particular that really bums me out. I don't see Axel here anymore. It looks like he wasn't able to hang in. Very depressing. But anyway, the point of the matter here is it looks like we're back in friendlier market states. Hopefully everybody can see all these crazy ass W's coming in here right across the board. And of course, you know, the public in general has completely lost interest in this space. So. I don't know if there's anything really new to report here. Yeah, I mean, you can see some orders, bids have been filled. Other orders, bids are still working. And I got lucky on this one. Actually, we can say bid filled. Sometimes, you know, this is a great part about little old ladies. Sometimes these fills come in the weirdest of ways. But what the hell, man, I'll take the money. Take the money and run. So, you know, everybody just, you know, keep focused. When your W's come in, we're in a very friendly market right now. So as long as we probably should finish off the video with just a quick overview of this is the one I want to show you. Yeah. So we've been talking lots about this recently. Really good analogy of a trader's life. You know, these are 4-hour charts. I'd consider them more like swing trades. The Bitcoin market, I think they just took it to new high here this morning. So that just continues to work its way. Really, you should be long from 39.80 area on this Phoenix market. And now your stop should basically be that level with an ultimate target of 4,600. It wouldn't shock me if the market raced up into that area. Litecoin, as I had said earlier, we were sort of anticipating getting ready for it to crap out here. The bot had you long. It stopped to scratch, literally came right down within 20 cents and then jackknifed its way out of there. But as I wrote on here, I still very much think that this is a sideways market. There's just... And if you're in this trade and your stop is still at scratch, well, there's just nothing you do. Just sit there and just wait. Same thing with the Ethereum, right? Just sort of waffling around here, not really breaking down per se, not really breaking out, just sort of bumping along. And I think that setup's just working away. The interesting thing is this setup has not had its move stop to scratch level hit yet. So this setup still has risk built into it. So don't be shocked if we actually have to come back down if we lose this trend line. We have to come back down to this trend line, but you might see that, and yet this setup is not broken. Keep in mind these are 4-hour charts, higher time frames, so you know they're going to have bigger sort of risk windows. And then I guess we'll just finish off here today with just a quick boo of the lower time frames. Did find it interesting that Litecoin is now trying to set up like an hourly bot here. It will probably set up on the resolution of this trend line. You can see how the market's slowly working up towards that 25 level on this trend line. It looks to me like there's some sort of battle here at the OK Corral coming up here. And we got lots of lows to work with. I think this low might have taken out a few of these lows, but let's see. 60.80, so that level's gone. Those levels are gone. 60.88, that level's gone. 60.90, so those levels are gone. So we're back to 1, 2, you know, and actually this would make perfect sense. Rally back up to the trend line. Then you have 1, 2, 3 tags of the trend line. And then if that could paint the 3, then a breakout through the trend line would fire that hourly trade. So if anything, to me, this is sort of saying, you know, there might still be a bullish setup here. You just have to wait for it. Maybe it comes in like Tuesday, Wednesday, London kill zone. So that's sort of the market state right at the moment. I would call this sort of climbing the wall of worry. And I think that it seems to me that the Bitcoin market is moving in towards some sort of major apex event here. We've got 2 different trend lines. One's a high-low trend line, which is very powerful. This pivot high to this pivot low. This is the trend line off of the spring and summer peaks from last year. So that's basically 1 year ago. And actually interesting, April, March, April was uppy. And in this particular case, we topped out right at the end of April. Now, I don't know whether that's what's going to happen this year or not. But this is a huge apex event right here. So not only is that remember we said that the trending signals we're probably, we're trying to resolve through the 13 EMA on the weeklies. If that can break out, then we jump up into sort of the 30 SMA on the weeklies, which is probably that 4,500 area. It would also mean the breakout through this horizontal support and resistance line, the breakout through this downtrend line, and then the acceptance of this high-low trend line. So huge, huge battle level here. And we've talked about in recent past, right? Usually MACD likes to move in like 4, 8s, 12s, and 16s. So this, for example, we went 1, 2, 3, 4, and then it pivoted the other direction. Well, anyway, point here is if we go 1, 2, 3, 4, 5, 6, 7, 8. So here we are at another one of these junctures. Ideally, what I'd like to see is the market break out through here, then pull back and find support. Think of sort of like Wyckoff checks and all that. And us hold that support and then move higher. Then you know that, okay, we're in a bull again. Right now, what I'm worried about, especially with the age of this MACD here, what I'm worried about is we get some sort of pop-up here. But the rule about trendline breaks is we can't really get a buy signal unless we get market structure on the other side of the trend line. So what I'm worried about here is we break out through the top and then crap right out and come back down and ride this trend line from the other side. That's, if I was going to put a statistical odds, this is what I think. Probably 70, 80, well, I'd say good 70% odds. This is what I think is going to happen. But if we're lucky, like I said, and this actually is the end of the bear, then we come along, we W on the other side of this trend line, Wyckoff check, and then rock and roll. We're back into a bull, right? And that would, the moving averages, right? We said we crossed through 13. We ran up to 30, which would be that. Then the consolidation, like we showed you, right? And actually, this is almost cliche, right? Kind of like this situation. We run up to the 30, consolidate, checks the original breakout, then says, yeah, I'm a bull, keep going. My hunch, though, and here we are. So 13, I think we pop up to that 30, and then we have to come back down. And then, like I said, Wyckoff check in between these moving averages, and then if we can get a bullish resolution on the other side, that will probably force the moving averages to cross back bullish, and then we got ourselves a bull market. So it's still a little too early for us to declare bull. I do like the idea of some sort of climactic blow off top here into the end of this move. Where was that chart? I think probably should wind this up here, but there is this was the chart that I put out, climbing the wall of worry. I still do like the idea of us completing this AB equals CD. There's that horizontal trend line that I was actually, I guess that would off the size here. I do like the idea of a nice blow off move up into sort of this 127. Maybe it's only 113. I don't know. But somewhere up into this area. But then once that event happens, what happens on the other side of that event? So, in your altcoins and all that kind of stuff, make hay while the sun's shining. That's the kind of environment we're in. But once this is done, then unfortunately, I think all bets are off. And also, too, remember back in like 2014, 15, Litecoin had a big rally in that ended about. I think actually I can show you over here better. Litecoin ended its rally. And actually, this would be a really good sort of trivia question for people. I believe, oh, that's not it. Here it is. I believe the halving event for Litecoin was like the middle of July. But notice that Litecoin finished its rally the last week of June, first week of July. So, and actually this is, very similar to what we're seeing. We would like to see this final sort of blow off top. Maybe that's what causes, Bitcoin to rally up into that 4,600 area. And then we need to go through a long period of consolidation just to confirm that, yeah, the bottom is actually in and we can start a new bull. And you can see in Litecoin's case, once the halving event was over, this consolidation period, it was in the end, like I think the halving event was around the end of July, if I'm not mistaken, but sort of the kickoff for the next bull was 87 weeks later. So that's a good year and a half. And this is sort of speaking to that chop Vegas kind of market. So, enjoy the market state while we're in it right now into this Litecoin halving event. Try and bang out as many doubles as you can on your altcoins. Doubles, triples, quadruples, whatever. I don't see Bitcoin shitting the bed here. I still think that we're going to work our way higher into that sort of scenario that I painted just a moment ago. But once that's done, then we have to go back to cooling our jets. But right for the time being, just enjoy yourself. That's sort of my comment. Oh, where'd that darn chart go? Around here somewhere. Oh, well. All right. I think I'll leave it at that for today. Got lots of meetings for Liam this afternoon. So I will be in and around the site. Where's that silly chart? Darn it. I hate when I do that. Anyway, I had it up here a moment ago. So I'll see everybody bright and early tomorrow. Hopefully we have Mr. Bear in the house tomorrow to give you his report. No, I've lost it. Oh, well. Have yourselves a great day, everybody. All the best. And the only thing left to say is, Alex, do we give any of these people any value today? I hope so.
Very much so, sir. Looking forward to seeing Thomas tomorrow, I guess. Yeah.
Yeah, okay. And thank you very much, Jamie. Absolutely great stuff as always. And thank you, Stuart, for your report as well. So, all right, everybody. Have a good day. Bye-bye.